I'm sure you've heard the news. Everyone's talking about the next big stock. It seems like every day there's a new ticker symbol making waves, a new company promising to change the world, and a fresh set of headlines urging you to get in before it's too late. But with so much noise out there, how do you separate the hype from the real opportunities? Today, we're diving deep into 5 of the most talked about names on the market right now: ULY, VOR, MNDE, WCFG, and XCN. Whether you're a seasoned investor or just starting out, understanding what these companies do, what makes them unique, and what risks they carry is crucial before you even think about hitting that buy button. So let's break it all down together, step by step, and see if any of these stocks deserve a spot in your portfolio. But what's the real deal behind these names? Let's find out together. We'll look at what each company does, the trends driving their industries, and the potential risks and rewards. Remember, investing isn't just about chasing the hottest tip. It's about understanding the story behind the stock, the fundamentals, and the bigger picture. So grab your notepad, and let's get started. First up, ULY, Urgent.lv. Think of this as the Uber for medical help, but, with less waiting and more saving lives. ULY is a tech-driven healthcare platform that connects patients in need of urgent care with medical professionals in real time. Imagine you or a loved one facing a sudden health scare. ULY's app promises to get you the help you need, fast, by matching you with nearby doctors, nurses, or paramedics who can respond quickly, sometimes even before an ambulance would arrive. This isn't just about convenience, it's about potentially saving lives by reducing response times and making healthcare more accessible, especially in areas where traditional emergency services are stretched thin. If telehealth keeps booming, ULY could ride that wave, but it's still small, so watch for growing pains. The telehealth industry has exploded in recent years, especially since the pandemic made remote care a necessity. ULY is positioning itself at the intersection of technology and healthcare, aiming to disrupt the way we think about emergency medical services. But as with any young company, there are challenges ahead. Can they scale their platform to handle more users? Will they be able to partner with hospitals and insurance providers? And how will they navigate the complex world of healthcare regulations? These are big questions, and the answers will determine whether ULY becomes a household name or just another startup that couldn't quite make it. Next, VOR, Biopharma. This one's all about cancer treatments. VOR Biopharma is a biotech company focused on developing innovative therapies to treat some of the most challenging forms of cancer. Their approach is cutting edge. They're working on genetically engineering cells to make them invisible to cancer's attacks, potentially allowing for more effective and less toxic treatments. The science behind this is both fascinating and complex, involving advanced gene editing techniques and a deep understanding of how cancer evades the immune system. The science is cool, but the road to approval is long and rocky. Developing new cancer treatments isn't just about having a great idea, it's about proving that it works, that it's safe, and that it can make it through the maze of clinical trials and regulatory hurdles. For every promising biotech, there are dozens that never make it past the finish line. VOR Biopharma is still in the early stages with most of its therapies in preclinical or early clinical trials. That means there's a lot of uncertainty, and investors need to be prepared for setbacks, delays, and the possibility that the science just doesn't pan out. High risk, high reward. Are you feeling brave? Biotech stocks like VOR can deliver massive returns if their drugs succeed, but they can also crash hard if trials fail or regulators say no. It's a roller coaster ride, and not for the faint of heart. If you're considering VOR, make sure you understand the risks and are comfortable with the possibility of losing your entire investment. On the flip side, if you believe in the science and the team behind it, and you're willing to wait for years as the company works through its pipeline, the payoff could be huge. Just remember, patience and a strong stomach are required. On to MNDE, Marinade, not for your BBQ. Despite the name, Marinade isn't about grilling or cooking, it's a decentralized finance, or DeFi project that's making waves in the world of cryptocurrency. Marinade is built on the Solana blockchain, and its main goal is to help crypto holders stake their coins more efficiently. Staking is a way for crypto investors to earn rewards by locking up their coins to help secure the network, but it can be complicated and time-consuming. Marinade aims to make it simple, automated, and accessible to everyone, even if you're new to crypto. This is a DeFi project, helping crypto stakers earn more with less hassle. By pooling users' funds and automatically optimizing where and how they're staked, Marinade can potentially boost returns while reducing the technical headaches. For crypto enthusiasts, this is a big deal. DeFi is all about cutting out the middleman and giving users more control over their money. Marinade's platform is open source, community-driven, and designed to be as transparent as possible, which has helped it build a loyal following among early adopters. If you believe in crypto's future, MNDE could spice up your portfolio. The DeFi space is growing fast, and projects like Marinade are at the forefront of making crypto more user-friendly and profitable. But as with any new technology, there are risks. Regulatory uncertainty, technical bugs, and the ever-present threat of hacks or scams. Still, if you're bullish on the long-term potential of blockchain and decentralized finance, MNDE is a name to watch. Just remember, the crypto world moves fast, and what's hot today could be old news tomorrow. But it's still experimental, so tread lightly. DeFi is one of the most exciting and unpredictable corners of the financial world. While the potential rewards are huge, so are the risks. Smart investors do their homework, diversify their holdings, and never invest more than they can afford to lose. If you're new to crypto, start small, learn the ropes, and don't get swept up in the hype. Remember, slow and steady often wins the race, even in the fast-paced world of digital assets. WCFG, wrapped Centrifuge. Sounds like a snack, but it's really about turning real-world assets into crypto. WCFG is part of a movement called tokenization, which aims to bring things like real estate, invoices, and even artwork onto the blockchain. By creating digital tokens that represent ownership of these assets, WCFG makes it possible to buy, sell, and trade them, just like you would with Bitcoin or Ethereum. This could open up huge new markets, make investing more accessible, and unlock value that's currently trapped in illiquid assets. Wild, right? If they pull it off, big upside. Imagine being able to invest in a piece of a skyscraper in New York, a shipment of goods in Asia, or a rare painting in Europe. All from your phone with just a few clicks. That's the promise of tokenization. And WCFG is one of the companies leading the charge. If they can build a secure, user-friendly platform and attract enough users, the potential for growth is enormous. But as with any ambitious project, execution is everything. But new tech equals lots of unknowns. Tokenization is still in its early days, and there are plenty of hurdles to overcome. Regulatory uncertainty is a big one. Governments around the world are still figuring out how to handle digital assets, and new rules could change the game overnight. There are also technical challenges like making sure the tokens are secure, the platforms are reliable, and the assets they represent are properly managed. And of course, there's the question of adoption. Will enough people trust and use these new systems to make them successful? Last, XCN, Onyxcoin, another crypto play focusing on making digital money work for everyone. Onyxcoin's mission is to bring the benefits of blockchain and digital currency to people who have been left out of the traditional financial system. That means building tools for fast, low-cost payments, easy access to savings and loans, and financial services that work across borders. In a world where billions of people still don't have access to basic banking, projects like XCN could make a real difference. If adoption grows, XCN could shine. But hey, crypto is a roller coaster. The value of digital currencies can swing wildly from day to day, and new projects face stiff competition from established players like Bitcoin and Ethereum. For XCN to succeed, they'll need to build a strong community, deliver real value to users, and navigate the ever-changing landscape of crypto regulation. It's a big challenge, but the potential rewards are just as big. So, are these a buy? Do your homework, know your risk, and remember, there's no magic stock. Every investment comes with its own set of risks and rewards, and what's right for one person might not be right for another. Before you invest in any of these names, take the time to research the company, understand the industry, and think about your own financial goals and risk tolerance. Don't just follow the crowd or chase the latest trend. Make informed decisions that fit your strategy. And remember, even the best investors get it wrong sometimes. The key is to learn from your mistakes, stay disciplined, and keep your eyes on the long term. Hit follow for more quick breakdowns. If you found this deep dive helpful, make sure to subscribe and turn on notifications so you never miss an update. We're here to help you make sense of the markets, spot new opportunities, and become a smarter investor, one video at a time. Got questions about these stocks, or want us to cover another company? Drop a comment below, and let's keep the conversation going. Until next time, happy investing.